Hi, this is Joe Rabil with Rabil Stock Research. So what I'd like to do, I'm going to combine my lesson with the current market environment. I want to follow up on something I talked about probably a month or two ago related to the ADX and how that signal, that warning signal that we discussed, has played itself out on the S&P. Now I want to bring us up to date and really discuss where we are right now. Now in the lesson, I'm going to talk about two different patterns related to low ADX. One is the exhausted pattern that we discussed, like I said, as a warning signal. The other is when we have a low ADX condition where we're kind of basing out. And I think both of these are real important. You want to understand them. Once we're done with that, I'm going to follow up and talk about where the S&P is right now. I'm also going to go through some of the other indexes. I want to take a hard look at what the sector action is doing, and then we'll go through the symbol requests. All right, let's go ahead and get going. Okay, so normally I am looking for this indication of ADX on individual stocks. All right, but in this situation, I've actually got a couple examples of an exhaustion pattern and another example of a low ADX breakout condition. And that's really what I wanted to cover today. And it all shows up on this spider chart. So I just want to, go through this and make sure you understand that the technique involved and what needs to be in place. All right, so let's just follow up on what we were discussing. Really, I think it was maybe right near the end of the year, beginning of this year. I was basically saying, look, we've been making higher highs on the S&P price chart. The overall trend looked okay. Even MACD, this was sort of in one of those irregular type trends where it kept crossing down, but it really wasn't as meaningful or as helpful as we were moving up. All right. Now, what was very helpful to me is this ADX, which confirmed on this peak, and then it confirmed on this peak here. And anytime the ADX can make a move above 25, we consider that confirmation. So when we broke out here in the fourth quarter, we started to see the ADX couldn't climb above. We got confirmation at this peak where we turned down, made a peak here, and the blue line, this ADX line, also made a peak. So we had a pivot high here confirming the pivot high in price. Now, we did pull back and make another test of this area, even made a marginal new high, showed no signs of improvement. And really what was causing the problem was the green DI, which is the strength of the buyers, could not break out. If you notice, it just kept making lower highs, even though price kept on moving up. We want to be on the lookout for that in a market that has been trending with strength. We then look at a low ADX as a negative. All right, if market keeps moving up and the ADX does not confirm, especially by not getting above 25, we know that's an early warning sign, and we need to start being very careful with any new buying or anything like that, because the result often causes a change in trend on that time frame. So what is a change in trend? That means to me that the 18 is going to come down and cross down below the 40 before this is all said and done. That would be my, that's kind of what I'm expecting. Now, based on the bigger picture monthly, which if you look at the 18-month line, we've got that as acting as support. So we could go through a corrective pattern where the 18 crosses down below the 40, but it doesn't break the longer term trend. We're just going to have to wait and see how deep of a sell-off this becomes. I do think the MACD wants to work its way back down to the zero line, and that is going to take a little bit of time. So I would say that might not have as much downside potential in terms of, really falling apart. But this could be a time-consuming correction, which I think makes sense after we've had such a big year in 2024. All right. Now, that's one condition. Now, I do want to point out that this same thing took place before the bear market. And I brought this up a few months ago in that video where I was discussing this. You notice how the ADX was strong and then it stopped confirming right about mid-year, maybe a little bit after that, and it did push a little bit higher, and then we finally broke the 18 weeks, similar to the way we broke the 18-week here. And that, to me, is the confirming evidence that we've got a problem developing. In this case, it turned into a big decline. So be on the lookout for when ADX stops confirming, especially on the weekly chart, after it's been trending with strength. All right, so if you get strength in the ADX and then it stops confirming, that's usually a sign that we need to change the trend. Now, in this case, the change in trend turned into a bear market. That's not always necessarily the case. We can change the trend and have this do something like this. So we could come down and consolidate. It doesn't have to turn into a big massive decline. Now it could, but and we got to be careful in here. But I'm still kind of the belief that right now anyway, that this is more of a corrective pattern rather than the beginning of a bear market. All right, so we've got that now. So that is what I'd call a low ADX condition that is an exhaustive pattern, meaning the market is getting tired, or the stock that you're looking at is getting tired. The momentum is exhausted. All right. Now look at the decline in the bear market. All right, and then notice how we break the downtrend line, but look at what's taken place. Now we have a low ADX condition here, right? And we're not going lower. It's not like we're making new lows and the ADX is low, or, like what was coming here, it was going new highs and we had low ADX. In this case, we're actually starting to try and shift the trend with the low ADX condition. Now, in this case, I like to see about 25 to 30 bars. All right, we need about that to take place, where the low ADX, so if you notice from here to about here, that's probably about a 25 to 30 bar period in the weekly chart. Now, there's a couple things I'm looking for. I'm either looking for a pattern develop where we have like a rectangular pattern or an ascending triangle type of thing, or it could be a shift in trend developing. And in this case, coming back up through this prior peak here would complete the 1, 2, 3. So as we moved up here, where green DI was holding above, and we have this low ADX condition in place, that is an incredibly powerful sign that we're likely starting a new important trend. All right. So we want to be on the lookout for these low ADX patterns in two different ways. One, after it's made a big move to the upside and it keeps trending, but the ADX dies off, or where you're basing, forming support, in a lot of cases where something you can draw trend lines on price and then wait for a breakout. And so we want to be on the lookout for both of those. They can be very powerful and very helpful. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on this page right now. You can see at the top, I've got my advanced trend and momentum courses. There's 3 different courses now. I've individually priced them, or you can buy them as a bundle, and they are lifetime access now. So I changed that. It's not year to year. Okay. And then we have the individual package. I have about 2 to 3 reports each week, plus a special video, weekly video for that package that covers a lot of details into what I'm seeing for the week. So if you have an interest, go ahead and take a look. Also, the book is on the book tab. You can go if this is a good place to start if you're new to my methodology. Okay, so I did the lesson part of this video yesterday, and now I want to bring us up to date on what's taking place with the S&P and the other indices. But one of the things I want to point out here is that we have had, right, this decline. Now we're coming back down closer to the 18-month line, which once this 18, so notice what's taken place now. Even though the 18 has not crossed down below the 40, we have kind of lost this trend because the 18-week is turning down. All right. And that's the first time that's happened since 2023. We did not have that happen over the course of the last year, year and a half. So I think that's pretty important, number one. All right. Now, the other thing that I'm watching here is the momentum characteristics on the smaller time frame. Because if you notice the way this is played out, the daily chart has shown real strength to the downside. MACD has confirmed the whole way. And look at what ADX is doing. ADX is moving up. It's at 43 and rising very strongly. So when we have that kind of a powerful signal in place, we have to sort of assume that, there's going to be some resistance overhead, even on rallies. And the first thing we actually want to see is the hourly chart showing signs of improvement or some sign of climax. If you look at the volume pattern, it's not really a climax. It looks like just very strong selling, no sign of a reversal quite yet. We have confirmation on the ADX on this move to the downside. The moving averages were not jetting away. Like what I would be looking for on this time frame is some kind of a climax move where we get really far away from the 18 and the volume should spike. Now, if we get that anytime soon, then I would be on the lookout for a pretty strong reversal. And the reason why I'm saying that is the sentiment has dropped down dramatically here over the last couple of weeks. There's a lot of people that are turning bearish very quickly. So we got to be careful about getting too bearish along with them. I'm a big contrarian. I don't like to play along with the crowd. Now, there are times when the crowd is right, and that's why I'm not just going to dive in. I'm still going to look for one of two things to happen. Either we're going to form some kind of a reversal pattern on this hourly chart, right? Hopefully with volume behind it and improvement in the momentum characteristics, or we're going to get kind of a let go pattern where people really just let go and we get some kind of a climax with big volume associated with it. Now, when that happens, the ADX and the MACD are not going to give us the type of signals we typically look for. When you get climax, you get, a lot of volatility, and these take a longer time to catch up. All right, so we need to be on the lookout for one of two things, either climax take place or momentum divergence. And I think if we're going to get momentum divergence, it's going to take a little bit of time. The other way you would look at this is that you'd get a reversal in the trend on the shorter term time frame, which can't just be a quick higher low and a higher high. That's not enough in this situation because look at what we've got overhead. We've got a lot of price resistance, and we've got two moving averages that have just rolled to the downside. We've got an 18-week that has just rolled for the first time. So be careful here. Don't think that, while I do think there's pretty good support in this area, it might end up slipping down through that and overshooting the landing a little bit before it's ready to turn to the upside. All right, now one of the things I want to do is take a quick look at the sectors. All right, now notice what's taken place, and I'm going to start. Let's start over here on the right. Look at the healthcare. So this is the moving average, and this of the relative strength. All right, now so this is a ratio line, which means when this is rising, it means it's outperforming the S&P. All right, so we're moving back above the moving average. Now, if we use that as kind of what we're trying to identify, notice the areas that are showing this specific pattern. All right. Energy is, a little unique, but it does showing signs of improvement because it's not breaking down. Okay. Now, so that's sort of interesting, but notice all these other areas, defensive, pretty defensive, right? And then we start looking at the more aggressive areas, the risk on areas, and we already had technology breaking down, but now we're seeing the consumer discretionary kind of giving it up. XLC, the communication services, has broken its 18-week line, but notice on a relative basis it's held up. But to me, this still has a lot of risk to pull back. So we're going to be aware of that. This got really far away from the 18 the 30 moving average on the RS. So I think there's some room for that to pull back. But just looking at this in general terms, to me, it looks like there's some rotation taking place into some of these more defensive areas. Now, that could be short-lived. We don't have a confirmed shift in trend yet because we're going to need to see this turn enough to get these moving averages. We want the 30 MA to actually be rising. I think the utilities probably meet that criteria, but not here and not here. So a little bit more work to do, but something to be on the lookout for. Okay, let's switch back to the QQQ and just take a look at this. Now, I think there's a lot of similarities to what's taking place in the QQQ and the S&P. The volume pattern is a little bit more aggressive. There's been heavier volume here, but we have the same characteristics in terms of momentum. Now, one thing I do notice in this is that we tried to make a pivot here. It doesn't really qualify, but notice how the DI isn't really confirming, and that is taking place also on the S&P. But one thing that's missing here is we don't have any strength in the buyers. We're just kind of losing a little strength in the sellers. So we're going to need to see some strength improvement here. But one of the things that I will say is that we probably want to identify a reversal on the hourly chart still, right? I mean, we're coming down a little closer to the 18-month. And what I was saying before in the S&P, when this rolls over and we've broken it, all right, an 18-week line, then the monthly line becomes the next sort of target area, all right? So somewhere around 458, 460 on this QQQ index is really where we want to be on the lookout for a reversal. Okay, especially with all the bearish sentiment that's taken place. So just something we want to watch. And again, I would even both the SPY and the QQQ, I want to watch for price and volume action. I want to watch for signs of momentum, divergence and or some form of a climax to take place. And I'd feel a lot better about, maybe stepping in. Now, I do think based on how sentiment has dropped so much, this is not a bad time to maybe do a little buying in, like if you have cash in your 401k. I'm not opposed to that. Certainly, if you want to leg in, I think that's probably prudent. But this is probably an area where we're coming into people getting overly bearish is usually not a bad time to do a little buying like that. All right, so look at the IWM. This is what's really disturbing, right? We're breaking the 18-month line. That's this green line up here. You can see that that's the 18-month here, right? We're breaking that line after a failed new high here. And the momentum was never able to break out. And so we are into a lot of support. I mean, I don't think there's a lot of downside in this, but my biggest concern is that this index is underperforming the S&P. We're going to want to see that reverse, I think, to improve the overall conditions that are in place. All right, let's take a look at something that is working. So I would go take a hard look at gold. Is obviously GLD has done exceptionally well. The gold stocks, the GDX section, is trying to play catch up now and starting to move. But look at what's taking place in silver. I would take a hard look at silver. It has a really good look to it. Look at CPER. This is a copper area. Look at this pattern. I mean, this is a great pattern with a big base starting to show signs of strength, kind of going the opposite of the market in a way. Just the way that it's trading. So I would say, this is an area I'd be probably going and seeing what types of stocks look attractive in the copper area. All right. Now, some of the big names need a little bit of work. The FCXs of the world, SCCO, are the two bigger names. They're not quite ready, but certainly I would be watching that area just based on what copper is doing. All right, let's look at a couple of these requests that came in. So, yeah, this is a really strong move in AT&T. I think this is a massive reversal that's taking place. And one of the reasons why I'm saying that is we've got the green DI on the monthly chart breaking out and doing something meaningful for the first time since 2016. And that didn't last very long here. But this looks pretty dynamic. And after a long period where we haven't been doing a whole lot, I like to look for, signs of a, powerful move where the ADX is crossing above 25 based on the buyers. Now, I do think this is going to need to come in. I wouldn't chase this stock. I think we're going to have to see how it handles support right around 24. And I think we're going to need to get an opposing trend pattern. So this is right out of my course where the 18 is probably going to need to cross down below the 40, get the MACD a little bit closer to the 0 line, show no real strength in the sellers. And if that happens, then I'd be looking to trigger myself in as a potential buy signal to the upside, and probably on a bigger scale. Like this looks like a pretty significant turnaround. Probably be looking for it in a longer term play. Warner Brothers is another one that I think is showing signs of improvement. Now, this chart actually shows probably the best characteristics. You can see this green line. That represents the 18-month. We failed at the 18-month here. We failed at the 18-month here, and then we got through it here. All right, but now this line is trying to cup around, but we haven't, and we did test it at this level, but I'd like to test it one more time and make another higher low here and have this line start to turn to the upside. So any pause here, as long as it's not too deep and then turns back to the upside and forms another higher low, I think would be a really encouraging sign, but certainly a stock that I would keep on my watch list. I think it has a really good look to it. All right, so this one had all the makings of something that was showing signs of improvement too. It was getting through the 18-month line. That line was starting to flatten out, right? We showed some strength with a big green bar to the upside, but then look at what's taken place. This is why I always say there's two parts to every trade. We get either a breakout move or a strong move to the upside, but we want to watch the pullback, all right? And in this case, it was kind of a breakout. We kind of want to see this hold $4 and then turn back to the upside. It did not do that. And not only did it not do that, it didn't even hold the green bar. So very concerning to see that. I think this is back into its range. I don't think there's a whole lot of upside right now. I think I'd be, watching and waiting still. See if this can hold the 3 level, kind of regain itself and set itself up all over again. I don't think it's quite ready at this point. Okay, CTM. So this is sort of interesting to me. Tech stock, which, tech is under pressure right now, but this is small enough where, maybe it's under the radar. We made this really dynamic move to the upside. Big spike high. All right. Now, I sort of assume the midpoint of that spike. So if we look at the spike and then the reversal, the midpoint of that is right about where we failed here. You see that? Rally up and fail. So I would feel like I need to get through that 175 area to feel a lot more confident that this is ready to go again. So this is going to need to make another higher high on this time frame. But I have to admit, I'm pretty impressed with what's taken place here. I like the fact that the volume pattern is very bullish. Okay, the ADX is very bullish after a long low ADX pattern. But I'm a little tentative just based on the environment and the fact that tech has been taking it a little bit on the chin here. So probably want to see this come back up through 165, 170 to feel a little bit more confident about what's taking place. Thanks for watching today. If you have any stock requests, you can send them to stocktalk@stockcharts.com or just put them in the comment area below. Also, if you want to learn more about some of these techniques, you can go to my YouTube channel called Invest Like a Pro. Have a great week, and we'll see you next time.